Hey everyone, in this video I wanted to highlight one growth stock that's down 77% off its high that I think you might regret not buying on the dip. The growth stock that I'm talking about is Etsy. Now I'll highlight a few financial metrics to explain and elaborate on why I think this stock is such a bargain right now. So let's jump right in, starting with revenue. Looking at trailing 12-month revenue, you can see the big explosion Etsy experienced during the pandemic. Many people went to its platform, its website to buy custom-made masks. That was one of the most popular items ever on the Etsy platform. However, you'll be interested to find out that even after economic reopening gained momentum, Etsy's business continues to grow. It's not like it had this up and down right after the pandemic. No, it kept the revenue growth growing. So that alleviated some concerns from investors who were thinking the revenue might collapse right back downward in the aftermath of the economic reopening. The next metric I wanted to highlight is the company's operating profit margin. Even though it's growing nicely, it's growing with profits. It's not sacrificing profits for the sake of growth. And you can look at since 2015, you can draw a trend line here, a nice upward trend growing for Etsy as revenue grows, its profit margin grows. And I like the asset light business model. I like that Etsy doesn't own any of the inventory on the platform. I like that Etsy doesn't get in the way of shipping and handling. It lets buyers and sellers do all that stuff. And that means that's more capital left for Etsy to return to shareholders. Also, I like that the industry's competitive forces are easing significantly. Etsy, eBay, Amazon, Shopify, and many others are all raising fees for merchants, making it more expensive for merchants to sell on the platform. So, since the industry is all doing it all at once, that means merchants don't have anywhere to go where they can say, all right, you know what, you're raising prices. I'm going to go to this other place because they're not raising prices. They don't really have that choice because every platform is raising prices. And so, industry wide, profit margins are rising. And that's always good news for investors, not so much for customers, right? Not so much for merchants, but it's good news for investors. And I like to invest in industries with those types of competitive prospects. Finally, the stock is cheap, right? That's the last reason I'm going to highlight for why I think you're going to regret not buying this stock on the dip. Etsy stock is trading at a forward price to earnings of 13.93, the cheapest it's been since January of 2022 when it was trading at a forward PE of more than 40 and cheaper compared to the average stock in the S&P 500. So for all those reasons, I think Etsy is one growth stock that's down significantly that you might regret not buying on this dip. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.